Good morning, everybody. It is Thursday, May 16th, 8:45 a.m. We are back for another market open. I hope everyone is having a good morning. We are here on planet Earth. We're alive. It's May 16th, which means, do we have 31 days in May? How many days do we have in May? I think it's 31, right? No, yeah, 31 days. So we are 2 weeks left from entering June, which is officially the halfway mark of 2024. That's kind of crazy, right? When you really think about it. June, I remember it was January like it was yesterday. The year, to me at least, seems to have gone relatively fast. And then we'll officially be in summer, June, July, August. And then we've got my favorite time of the year, September through December, coming up in just a couple months. So absolutely insane. We are here. A lot of stuff to talk about today. Number one, Bitcoin is surging. So we're going to be talking about Bitcoin. Bitcoin, absolutely incredible run from the lows. Bitcoin right now, 66,299. It hit 66,800 this morning. There are a variety of factors that are allowing Bitcoin to inch higher. And we're going to go through a bunch of different things that came out yesterday. First of all, the ETF inflows were incredible. So we'll talk about that. Number two, 13G and 13Fs were disclosed yesterday. We've got Warren Buffett and what he's buying and selling, especially that secret stock that I thought it was one thing, but it seems like it's definitely not what I thought, even though he did add more to that position. Stanley Druckenmiller, Brad Gerstner, Bill Gates, Bill Ackman. You've got a ton of people that have disclosed what they're actually buying and selling. So we're going to talk about all of those. Meme stocks, GameStop is down 10%, AMC down 5%. So meme stock craze has started to die off a little bit. We'll see if there's any updates from Warren Katie there, and we'll talk more about that. Robinhood updates yesterday. They announced their new metrics for the month of April. I thought the metrics were very good. We'll talk more on what that means. And then we got S&P 500 at $530.21 in the pre-market. It is absolutely incredible looking at 530 right here in the pre-markets. I mean, we'll talk more about my thoughts on what's happening in this bull market, but who would have thought 530, dude, when we were at 450 to start the year, 470 to start the year, when we went back to 490 when Israel and Iran got into their fight, like April 20th or April 19th. 530 seemed like a far time away, and we are here within a matter of weeks, and it's culminating to be a really interesting bull market. So, lot to talk about. Thank you, everybody, for being here. Let's get into the market open. Lewis, Mark, William, Phil, FIMOS, Broccoli Bob, Adam, Victor, good morning, people. Cheers from Spain. Because it is Thursday and we haven't done it all week, we haven't done it in 2 weeks. Comment where you're from. So where are you watching from? Are you watching from home? Are you watching, but also the country you're watching from, city you're coming from? Put that in the chat. We usually do it every week, but last week we got super busy, so we didn't get to do it. Also, you guys, I have a bone to pick with you guys. No one told me for the past 3 days, literally for the past 3 days, that I missed word of the day. No one decided to tell me. End of stream. I'm like, all right, guys, have a great day. I'll see you guys in the market close. No one's like, hey, word of the day. No one thought to tell me about word of the day. And I got a shout out to Brandon, who comments every day, because Brandon is my OG guy who always like makes a comment because of the word of the day. He was like, Amit, fuck is going on, bro? I'm like, dude, I'm sorry. Like, I don't know what's going on. But yeah, I blame everybody for that. June, Ramu, Harry, what's up? I'm Beneficial, Rick, Swiftless, Mr. Russo, Jeff, Brandon, thank you all for being here today. It's not SiriusXM. I thought it was SiriusXM. It's not SiriusXM. All right, let's see where you guys are from, and then we'll get into the morning news. We got Turdy from Dublin, Ireland. I love it. I like my money like I like the city in Ireland. Dublin, baby. That's what I'm talking about, okay? That's what I'm talking about. We've got Canada in the house. United Kingdom. Adam says he's from a shithole in New York. Bay Area, the moon. I love that. Doug, I think you said your portfolio hit an all-time high yesterday, right? So, okay, so we see you're from the moon. What's up? Mark says my birthday party. Of course, that's a good one. That's points for creativity there. Seattle, Pennsylvania, California, San Diego, watching from a Wendy's dumpster. Okay, I like it. Their bacon cheeseburgers are not bad. Washington, West Cork, Ireland, Georgia. Kelly says she's from hell. I'm sorry, you're from hell, Kelly. Thank you for being here today. Philadelphia, Boulder, Colorado, Denver, Houston, Scottsdale, Germany, Edison. I love Edison. Edison, New Jersey. I'm near Edison. Germany, Sin City, Las Vegas. I love it. Nantucket, Massachusetts. You said that because you know I don't know how to say it, but you know I don't know how to say Massachusetts, so you said Massachusetts. But yeah, Nantucket, Massachusetts in the house, Kentucky, Miami, Panama. I love it. All right, so let's get started today. We'll start off with the first update that I want to talk about, which is Warren Buffett. So What is Warren Buffett's secret stock? I thought it would have been Palantir. It ended up not being Palantir. Then I thought it would have been SoFi. Ended up not being SoFi. I also thought maybe it might be Disney, and then ended up not being Disney. The stock is, well, you know what? Let me actually share a video of what the stock is, and hopefully you guys will get some entertainment, because that's also why you're here every morning on what I did on market close yesterday to convince someone that we all know, our friend Steve, what Warren Buffett's secret stock was. Here we go. For this, bro, because like I gave you 3 other guesses. It was three. Just tell me. It was 3 guesses for a good reason. Just tell me. Dude, he bought Palantir. No, he did. Yes, he did, dude. That's why I wanted to call you, bro. I wanted to fucking call you. He did not buy Palantir. I wanted to call you. That's why I was like, yo, Steve, I gotta get on the stream with you, bro. He did not buy Palantir. He fucking bought Palantir, dude. It's like it's a 10 million shares, 2% of his portfolio. It's in. Did he really? I can't believe Steve fell for it, dude. He actually almost fell for it. Why do you? No, that's crazy. I can't believe he bought it. That's awesome. Okay, I'm kidding. He didn't buy Palantir. Yeah, no, like I said, I had no fucking no. Well, so what did he buy? All right, he did buy a stock we all love, though. Like, okay, what is it? He bought SoFi, bro. Stop it. Okay, finally, no bullshit. He bought Disney, bro. This one I knew would work because I knew Steve knew Disney was okay. Bought Disney. That makes sense, even though I don't know why. Okay, I'm just kidding. I was fucking with you on that. Okay, this is the final one. I promise. There's no way I'm lying about this. He bought a company called Chubb Limited. Yeah, that makes a lot of sense because he's in insurance. How do you know what Chubb Limited is, bro? Dude, because I do insurance. Oh, yeah, I forgot you do insurance. All right, so because Steve does insurance, this is what Buffett bought. $6.7 billion of Chubb Limited. A relatively boring company, but a strong company nonetheless. It is an insurance company. Buffett loves insurance. He's been in insurance for a very long time. Insurance, very reliable business. You can kind of predict the cash flows of what insurance looks like. And that's why Buffett liked it. Now, the reason Berkshire took 9 months to accumulate the 26 million shares that they bought in Chubb is because the insurer trades only 1 million shares a day. And so Berkshire is going to have to purchase up to 15% of those shares every single day over the past 9 months. I believe their average is somewhere around 170. The stock right now is at 270, and it was up 5% after Berkshire announced it. So that's why they had to kind of get this special permission from the SEC in order to keep it private from everybody else. Now, I also think it's hilarious that, again, the SEC yesterday, the former commissioner went on CNBC and was like, Roaring Kitty is manipulating the market. And you've got Buffett literally getting permission from the Security and Exchange Commissions to not have to disclose a stake. Like, I can't do that if I want it. Like, no one just gets the privilege to like buy a stock that no one gets to know, right? Nonetheless, Buffett got to do it. Chubb Limited, 273 in the pre-market, up 8% right now. It's an insurance company. It's a reliable insurance company, about 1.36% dividend. I think his average is at 150, 170, 180-ish, because that August 2023 is when he started buying, which means he's up almost 50% of the position in terms of capital appreciation, and he's been collecting a dividend, which has been really good for Buffett as well. So that's nice to see in the context of Chubb. Someone says here, Chubb is a great company. I work in the industry, and it's one of those places that people want to go to work at least the people that I went to school with. Yeah, that's what Steve was talking about. Steve works in insurance, and he said Chubb was very interesting as well. Gian says 220 is the average price. Okay, interesting. So I guess you have the information that it's 220. I thought it was closer to 180, but I might be wrong on that. If that's the case still, I mean, he's sitting on some pretty hefty profits, and now it's at 273 with 26 million shares. Here's Buffett's entire portfolio. So this is a cool website for those that haven't seen it before, Datarama. Some of you guys may know it, some of you guys may not, but it basically shows every big hedge fund portfolio updated once everything is good to go. So unfortunately, Buffett did not buy Palantir. Steve believed it for a second, though. If someone told me Buffett bought Palantir, I wouldn't even believe them. There would be no way I'd believe them. But Steve, Steve believed me for a second. I guess I was convincing enough, or he was gullible enough, but he believed it. He did not buy Palantir, SoFi, or Disney. He bought Chubb. So this is what we're looking at. He sold about 116 million shares of Apple. Then Bank of America is 1 billion shares in American Express, Coca-Cola, unchanged. Then he sold a little bit more of Chevron. Makes sense. Took some profits as oil prices went up in the month of April. Added a little bit of Occidental. And those were kind of the main moves. He did add 51% to his Sirius stake. So although everyone is excited about Chubb, he did still add a lot of Siri. So I do think Siri was also, I guess it's not a secret stock since everyone knew about it. Chubb was a secret stock since no one knew, but those two are the positions that he's betting on. I think Sirius, he's betting on an acquisition. Liberty, Liberty is the, Liberty Media is the holding company that owns 84% of Sirius XM. So he's probably hoping the full acquisition goes through and there's an arbitrage there. And then Chubb Limited, again, insurance company. And it seems like that's kind of the route he's going down for that. So that was the main thing for Warren Buffett. Now, having said that, someone else did something really exciting over the past 45 days because there's a 45 delay here. And that was invest in Palantir, even if it was not Warren Buffett. And that person is Stanley Mr. Druckenmiller. He is back in Palantir, 770,000 shares. Now, he did this in the last 45 days. I really doubt he sold on the earnings pop we saw right before earnings were released. That would be kind of weird, to be honest. So I'm pretty sure he's back in for the long term. At least that's what I think. And he has a 2130 average, 0.42% of his portfolio. Now, what's very interesting, very interesting, that Stanley Druckenmiller comes back into Palantir. It's great news for shareholders because he left Palantir at $8, and you can't blame him for why he left at $8. Not only was the company in a really tough spot, and it would have been dead money for a while, like a lot of us were sitting on dead money, right, until it rebounded, but he did something when he sold Palantir at $8. And what he did was buy NVIDIA and Microsoft. So he made a crap ton of money off NVIDIA. The other update to what Stanley Druckenmiller did yesterday is that he sold 71% of his NVIDIA. And he loaded up on something I had no idea. I mean, like, I would not expect Stanley Druckenmiller, who's primarily a growth stock investor, kind of really looks for those AI-based names, high-tech names. I did not expect him to go into call options on small caps. So he loaded up on IWM, which is the Russell 2000. It's up about, I think, 8% year to date, or over the past month. And he sold 71% of his NVIDIA position. Now, the reason he sold NVIDIA, in my opinion, has nothing to do with the fundamentals of NVIDIA. I think NVIDIA is going to crush earnings. We'll talk about them more in a second. But TSM reported 60% year over year or month over month sales in April, which means I think the demand for NVIDIA is just insanity. And they're probably going to beat the $22.8 billion the street is expecting. But he was up almost 3x, I believe, 2 to 3x. And if you're up that much in the public markets, and you know, you're managing real institutional capital, you got to lock in some gains. Like, you can't just let that sucker ride for the next 10 years. You got to be able to give some of those profits back. So I think selling the NVIDIA position was less about, oh, NVIDIA is going to crash, more about, hey, I got in at 150, stocks at 950. I deserve to take some profits, right? Let some other people buy these shares. And then where are the places that are not really doing that well? IWM, I haven't been a big believer into IWM. I love Tom Lee, but I haven't been super on board with small caps. I think he's ultimately right at the end of the day, because as rates come down, the market's going to want to broaden and diversify the rally. I just don't like this ETF. I mean, I looked inside of the ETF. I'm like, there's nothing exciting that's in here that makes me, super interested. So IWM probably will do well, but it seems like Druckenmiller's on the same board with Tom Lee, which is that, look, if we've had a tremendous rally, Amazon's up 22%, and NVIDIA is up 87%. Microsoft is up 7%. Apple up, now it's up like 2%, but it was down 10%, right? Old is good. Tech recovery, Mag 7 stuff has been going great. The market's going to want to look for more exposure to other assets. Google at 173, all-time high, and IWM might be there. So very interesting. Stanley Druckenmiller buys more Palantir. I like that he comes in at 2130. I think that's a great buy. Under 23, I think is right now is a phenomenal buy for Palantir over the long term. I don't think that's going to be the worst buy price, worst entry price, but he's back in. He's back in as well. And one thing about Stanley Druckenmiller that's also really important is he was one of the first investors in Palantir back when they were in like 2015-ish, back when they were still a private company. And so this right here, I don't know if a lot of people have seen this, but I mean, he is really close with the company. So it was surprising when he sold, but he probably sold because he realized NVIDIA was a better opportunity. He did an entire keynote with Alex Karp right here. This was September 2022. So this was at Palantir's, I think, headquarters, and they're just talking about the world. And he actually called him the next Steve Jobs in this. And so he's had the utmost respect for Palantir. He just saw that it was dead money for a bit, but now he's back and he's paying a 3x premium that he used to get into, that he paid before. But it is exciting to see him now back in the in the stock and more excited to invest in Palantir. So that's what we got right now in the context of hedge fund managers. A couple other people we'll talk about, and then we'll move on from there. So we saw Warren Buffett, we saw Druckenmiller. Michael Burry is betting big on China. He has added to his position by 80% in JD. JD had earnings today. We'll talk about them. Alibaba adds by 66%. HCA Healthcare, that's a Palantir client, adds by 25%. And then Baidu, they also had good earnings today. A Chinese company, he added 40,000 shares. He also added Square. I don't really know why he's adding Square. That one's very interesting to me. But he is adding Square. I guess that's kind of his like pseudo Bitcoin play. And then he added Citigroup as well, which is a bank. So he's been adding aggressively to China primarily. That's what he's been going after. And it's been interesting to see how he thinks of China in regards to, how others may think of China. Now, on top of that, we have Brad Gerstner, who's someone we all know. He is big into Snowflake and Meta. He updated his portfolio, and this is what we got from him. Top 5 holdings: Snowflake, Meta, Uber, NVIDIA, and Microsoft. I think all 4 of these are fine. Snowflake is going to be fine, but it's down year to date. That's what's hurting his performance. He also added to his Tesla stake by 276%. That also makes a lot of sense because he's been on his podcast basically saying that FSD is going to change the world. So if you believe that's the case, then you probably should be adding to that position. Snowflake is the only stock that's down 15% year to date. Obviously, Tesla's down, but in the top 5, NVIDIA, Microsoft, Uber, Meta have all done phenomenally well. And my question was, do you think this 5-stock portfolio outperforms over the next 5 years? I think it does. I think NVIDIA alone will carry the portfolio. Uber's not going anywhere. Meta is just getting started, in my opinion. Microsoft, same thing, just getting started. GPT-5 is yet to come out. Snowflake's the one kind of mystery, which at this valuation, now I think his average is like in the 300s, or maybe it's like 250, 270-ish. At this valuation, I think Snowflake is going to be fine. But it does beg the question, is Snowflake exciting over the next 5 years? And I don't know. I would rather have him at Palantir, but he picks Snowflake. So that's what we got in terms of hedge fund updates. And last hedge fund update I'll show you guys is Bill Ackman. Ackman didn't make that many interesting moves other than selling a crap ton of Chipotle and Lowe's. So those are the moves he made. He reduced his Chipotle position by 10%. And if you look at the insider sales on Chipotle, he's selling with the insiders. So for anyone thinking to get into Chipotle after they do the split, it's up 33% year to date. One of their biggest institutional shareholders is selling. The insiders are selling. It's just one of those things you want to be a little cautious of before you get excited that it's at $60 after they do the split. And then as you can see, Lowe's is not on this portfolio. So Lowe's is gone. So he sold Chipotle, some of it, sold Lowe's, completely out of it. So his portfolio is pretty concentrated into Chipotle, Hilton, which is a hotel, Restaurant Brands International, Howard Hughes Holdings, Google, and CPKC, which is actually a Palantir client, Canadian Pacific Kansas City. If you guys watched 2 AIP cons ago where they presented. Google, I only thought he had 4 million shares. I didn't know he had another 9.3 million. So he has like Google with an L and then regular Google. So it's 2 different versions of Google, but relatively the same thing. So he has about 14 million shares of Google. I believe the average is close to $120, which means if that's the case, then you've got Google and Google and Hilton and Chipotle making up the bulk of the portfolio for how he's navigating this, which I think makes sense. I mean, it's not a horrible portfolio either. And Google's done very well this year. He swapped out Netflix for Google. That was a big move. So nice to see that Google is one of the top holdings in Bill Ackman's portfolio. All right. So those are the main hedge fund updates. We got Ackman, Buffett, Druckenmiller, and Brad Gerstner. Some big moves have been made. Now, one thing I didn't see was Palantir being added to a lot of portfolios. It was one of the underperformers in terms of the 13Gs and 13Fs disclosures. So Palantir wasn't added that much. And that goes to speak to the institutional holdings of Palantir. Now, although their institutional holdings are rising, which is a good thing, it's not rising at astronomical levels. So I think right now we're at about 39 or 40% of institutional holdings for Palantir, which is good. People did add, but it wasn't like, people added aggressively. So I think we're going to need another quarter or 2 quarters of growth. After this quarter, we put up 21% year-over-year growth. That should make it even more compelling to investors. And in the next 45 days, we should see some more ads, hopefully, in the world of Palantir. Meme stocks. Gamestop is down 11% in the pre-market. AMC is down 7% in the pre-market. It looks like this meme stock rally, I don't want to say it's coming to an end, but the momentum is pretty bad right now. Roaring Kitty has been tweeting like a madman, and now the tweets are getting annoying, and they're not really doing anything valuable. People are kind of wondering, is this even his account at this point, given the way he's tweeting, given the spammy nature of the tweets? And so I don't know, man. If this was a 4-day phenomena, it would suck because it was super fun and I was happy to keep this going. It was just like super fun seeing it all play out. A lot of retail, I would imagine, is holding a bag right now if they bought in at some of these higher valuations, closer to $70. Now, hopefully that is not the case, but you could imagine that there is a little bit of bag holding going on right now for retail. Maybe it comes back, maybe not, but we will see. Robinhood, 1856 right now in the pre-markets. They had April metrics come out yesterday. 10 billion of crypto volumes were traded, 90,000 new accounts, $4.1 billion of margin, 123 billion assets under custody, 70 billion of equities, and 126 million option contracts traded. Pretty good earnings. Nothing crazy. You can see it has a red candle right now, primarily, I think, because as GameStop and AMC fall, Robinhood's going to fall with them just because it's kind of seen as the momentum based on those. I think there's a broader thesis there, but their numbers were great. They weren't like absolutely incredible to the point where the stock should be like $24 right now, but they were good numbers. And it's one of 3 months in a quarter. We'll see what happens in May. So far, the first couple of weeks of May have been pretty incredible. And so we'll see what happens with that on June 15th when we get the May numbers. Enphase right here, 115, Microsoft 422 right now. Teladoc 1282, Redditor is down about 2.31% as well. And then we got Palantir at 2165, SP 500, 529.74. Let's talk a little bit about Bitcoin. A lot of news updates to talk about Bitcoin. So Bitcoin right here, 65,997. In terms of the Fibonacci levels from a technical perspective, Bitcoin needed to get and close yesterday above 65,000 to assume that a bull trend is still in place. So we got that done. Number two, Millennium, which is a ETF, but it's not an ETF. It's like an institutional manager of money. You would call them an asset manager. They have 64 billion in assets under management. Millennium Management, that's what they're called. They just disclosed a $2 billion stake of Bitcoin ETFs, which was absolutely incredible to see. I mean, this is the first time now that these 13Gs and 13Fs are coming out that we're seeing institutions disclosing how much money they have in Bitcoin. It does not seem like this was retail buying up these ETFs. 844 million of BlackRock's IBIT ETF is in one asset firm. So almost 3% of their entire assets under management are in Bitcoin, which is way more than what people projected for the institutions. They thought maybe it's like 0.05%, but these institutions are getting a bit more friendlier to the fact that, hey, maybe it's time to think about Bitcoin as an investment that actually makes a lot of sense. We'll get an update here on institutional exposure to Bitcoin, and then there's a couple other things I want to talk about in regards to why Bitcoin is continuing to go higher.
Bitcoin surging more than 7% on Wednesday, having its best day since March 25th. Cryptocurrency taking off after a cooler than expected CPI report. Right now, Bitcoin, I think, is still above 66. It is. Joining us now, Anthony Scaramucci, Skybridge Capital founder and managing partner. His new book is From Wall Street to the White House and Back, and it does go over his experience, and it's actually 4 pages. See, if I pay him to read it, he charges me for the institutional adoption of Bitcoin. I've seen some comments just recently. The PayPal guy said everything is eventually going to be on Lightning or something. I mean,
Lightning Network. Well, I mean, listen, we'll talk about Lightning Network wherever you want, but I think the institutional adoption is happening now. The state of Wisconsin announced, we expect other pension funds to announce. And of course, Bitcoin now has the regulatory approval. And I think that was the rate limiting step for a lot of these large scale institutions. And just remember, if you're not long Bitcoin, you're possibly short Bitcoin in the sense that if you believe, and I think BlackRock has more or less said this, that this will be part of a long-term tactical asset allocation strategy for institutional investors, then at some point you've got to get long Bitcoin. Is it 1% of Bitcoin, 1.5% Bitcoin? I don't know. So a lot of smart institutions are saying, let me get long this thing before it becomes part of a total tactical asset allocation index. And I think that's starting to happen now, and that's very good for Bitcoin.
Is it because it's a hedge against 34 trillion in money printing or whatever it is? Or is it going to be used to seamlessly transact around the world? Or both?
So, I'm in the digital gold category.
At this point.
Yeah, Michael Saylor. I'll probably call my cell phone after this and say, no, this is in the universal
The point is, whatever you believe, whether it's digital gold, store of value, it really doesn't matter. The point is institutions are buying. And so we can see Bitcoin right here, 65,890. Remember, it was at 54,000 or 56,000. Let's actually see on the 1 month. 56,000 on May 1st. So it dipped pretty aggressively, and we have a nice V-shaped recovery. It went from all the way to 64 to 56, right back here to 65. As a result of that, the crypto stocks are doing really good. So we've got MicroStrategy 1503 down a little bit in the pre-markets because Bitcoin's slightly down from where it was an hour ago, but still, I mean, MicroStrategy was at $900, right? So MicroStrategy doing amazing. CleanSpark 1712 right now, Coinbase 216 in the pre-markets, Marathon 1979, and then Robinhood here 1845. We're seeing momentum come back to the Bitcoin stocks. The question is, can Bitcoin keep this up? Because if it cannot keep this up, it's going to be in a tough situation. If it can keep this up, then these stocks are going to be able to do well. And the problem is, for a lot of people that have options on these stocks, the time decay is really hitting at you, right? So you really need Bitcoin to get to 70, 80,000 relatively soon based on the expiration of your options, because if not, Bitcoin might hit 90,000, but if your options expire within a couple months or something, right, it's going to be a little tougher to have the momentum on the options and gain the alpha and the leverage if Bitcoin doesn't go up in a certain amount of time. So I think everyone's kind of waiting for this to kind of play out. Now, in terms of the ETF inflows yesterday, this is what's getting me excited. Remember the halving event that happened? That thing that we all thought was like super important, but like we all forgot about? Yeah, that halving event is leading to 450 Bitcoin created every single day or mined. And the ETFs ate up a couple thousand Bitcoin yesterday alone. I think almost 10,000 Bitcoin. So we have 131 million by BlackRock, 86 million in flows by Bitwise, 38 million in ARKB, and then the rest of them brought in about 10 million. And Grayscale, the thing that sells 150 million every day, they brought in 27 million of net flows. So $303 million went into the Bitcoin ETFs. Very difficult to just randomly get $303 million from retail. These ETFs essentially become the custodians to be able to get that money into the asset class. And that's what's creating that constant bid on Bitcoin to stay stable and not necessarily go down as well. Rob says, does Dogecoin do well? Well, I mean, if Bitcoin gets to 100, Dogecoin is going to do fine. Dogecoin won't be in a bad situation. Dogecoin right here at 15 cents. I remember when it was at 7 cents back in like January. And I was even thinking of buying it, but I didn't pull the trigger. I mean, look, Dogecoin, 15 cents. It's nice to see it here. It probably gets closer to 30 cents if Bitcoin gets to 100K. And the entire ecosystem is going to dominate. Ethereum probably 4,000. Solana closer to 250. But it all depends on this guy. This guy's really got to get moving. And from what I'm looking at, the way the ETFs are gobbling up Bitcoin, if that happens for another couple weeks, I don't know how Bitcoin stays below 75,000. I mean, there's just way too much demand coming in from the ETFs that are starting to eat at it. And the institutions now are signaling to the market. We saw the state of Wisconsin yesterday on their pension funds. They put in $100 million into Bitcoin ETFs. It's like everyone's realizing this is an asset class we want to hold for a long time. And the idea that this falls back to 20, 30,000, I think those fears are relatively small and they're gone. We will get dips here and there. Maybe we get another 10, 15% dip, but going down 50, 80%. Right now, given we're not at a top, which tends to happen when you're topping out, seems a bit unlikely, but we will see. We will see how this ends up playing out. So that's what we got in the context of Bitcoin, and Bitcoin is continuing to do well. So we got Bitcoin IWM at 209. If you're just joining, Stanley Druckenmiller has loaded up on IWM call options. Did not expect him to make that move yesterday, but he decided that he's going to sell some of his NVIDIA to get into IWM. Again, it was very interesting for me when I saw that play out and I saw that was disclosed. I guess he really does feel that we need to diversify. And in order to diversify for this rally to continue, then we're going to need to see some action outside of just big tech. Now, speaking of diversification, we also had another company report earnings today. And the company that reported earnings was a company that, at least in the United States, all of us know very, very well. And that company is Walmart. Walmart reported earnings today, and let's just say it seems like they crushed it. Stock is up about 4% in the pre-market. 4.6% Walmart U.S. revenue year-over-year growth. They beat 160 versus 159. Beat on EPS 80 cents versus 72 cents. 205% net income growth. They doubled their net income. Incredible. 5.1 billion net income, 161 billion in revenue, 9.2% higher dividend than they had last year. They grew U.S. same-store sales by 3.8%. 6% again, total revenue. Sam's Club is up 4.6%. And as you can see right here in this graphic, they've done really well. And they're showing that people, the biggest thing to take away from this, even if you don't own Walmart, is people are buying. People are still buying. People are buying products. And if people are buying products and Walmart's able to sell and people aren't struggling to be able to buy their local goods and services, and Walmart's not really struggling. Costco, we didn't get their earnings yet, but we saw their numbers. They're not struggling either. Their April sales are up 60% year over year, or sorry, 19% year over year. Then we've got some momentum in the broader market outside of just tech. So really nice seeing that a lot of companies are finding their momentum, finding the things they need to do, and getting earnings to shape towards reality, which gets to my next discussion. I talked about this on the market open or market close yesterday, but I want to bring up this discussion here on the market open. The S&P hit an all-time high. It's at 530. I can't even believe the S&P is at 530, but the S&P is at 530. Pretty much every analyst, BMO just raised their price targets to 5,600. A lot of the other street analysts have it around 5,000, 5,100. Some, more bearish at around 44, 4,500. But 53 right now to me is either one of two things. Either this is a trap and none of us can see it, and it's very obvious with the meme stocks that it's a top and we should probably sell, but we're not doing it, just like November 2021, and we're holding on, and we've got a lot of downside momentum from here. Or this is literally just the beginning of a bull market, and the reason it's a bull market is because AI is real. Every single company has put up phenomenal numbers that needed to put up phenomenal numbers. Even if their stock price didn't reflect it, they put up the numbers. And inflation is coming down. So my thesis on why this is a bull market and why, for the majority of the year on the show, we've been saying it seems like this is a bull market is because every company that put up numbers got rewarded. If you didn't put up numbers, you didn't get rewarded. So Shopify put up 20% year-over-year growth. They beat on GMV, beat on EPS. Stock tanks 22%. I like when that happens. A, because you get really good buying opportunities on companies that are executing very well, but the street, doesn't like their valuation, which means the valuation gets cheaper. B, the street starts to be super conservative on what it takes for your stock to go up. I mean, even a company like Robinhood, I think should be around $25, $26 right now. The street's like, no, you got to really prove it to us. Palantir probably should be closer to 23, 24, right? Like that's not an insane premium compared to 21, 22, especially because their PE has decreased given they've increased guidance for growth for the full year and for US commercial. But the street's like, nope, we want to wait and see. And so I like that. In 2021, that wasn't the case. In 2021, you flicked your fingers and the street was like, hey, do you want some money? Right? Like because you were not getting anything with your interest rates. The interest rates were near zero. There was no money market funds to put your money into to get 5% or 5.5%. So much money was free to be allocated that every asset was artificially inflated. That's not happening right now. Like we are in a bull market, S&P 500 all-time high, which is not that high from where it used to be at 478. Now it's at 530, about 10% higher, but we did fall all the way down to 3,600. We are in a bull market, S&P 500 all-time high, NASDAQ all-time high, and interest rates are the highest they've ever been in 40 years. I think that's incredible. I think that's pretty damn incredible. And we got a decent CPI yesterday. So for all the bears that feel that this is a cataclysmic recession waiting to happen and things are broken and things are going to get bad, I think until unemployment ticks up dramatically, that's not going to be the case. And if it does start to tick up, we will obviously see the Fed start to cut to front run what would be a slowing down economy, which means maybe Jay Powell is able to control it. To some extent, maybe his 10-year right here at 4.359. So we're seeing the 10-year under control. It was at 4.7 a couple weeks ago. So it's nice to see that came down. And then oil prices, let's take a look at that. Oil prices up a little bit today, but still below $80 on WTI, and below 90 on Brent crude. So from every angle that I'm seeing, it really does not seem like this is the most scary time to be at an all-time high. It seems more so like this is what the market is betting on because they deserve to have these stronger numbers. And they deserve to have these stronger numbers primarily because the market has realized where else are we going to put our money? By the way, there's still $6 trillion on the sidelines, right? Still $6 trillion on the sidelines. And so if there's still $6 trillion on the sidelines, there's probably a little bit more momentum as well if people want to come into the market and allocate some capital from that perspective. I mean, that's something, I think people try to say, oh, the money market funds don't matter that much. And we'll see. We'll get an update by the market close where the money markets are today. I don't think they updated this early. Let me see. Yeah, they didn't update yet. The reason this is so important is because that's real money. Even if it's institutional money and if it's not like retail investor money, those institutions need to get a return on their money as well. And so they need to allocate it, they need to invest it. They want to do stock buybacks, which ultimately helps earnings, right? And if they're not getting 5.5% from the Fed, maybe they do buy back their own stock, which helps shareholders. That increases the asset prices of those companies. Like there's so many different ways that money influences the broader economy. The question is just if it plays out and if inflation actually does come down in an interesting way. So, and Mark says right here, we are in a bull market until we aren't. And I've been thinking about this comment for a long time. I'm happy you said that, Mark. We're in a bull market until we aren't, because one of the things I'm concerned about is like, what if we're in a bull market? S&P's at 530, right? I've given you all the bull market arguments, and then tomorrow S&P goes to 500, and then I'm left thinking, well, what was wrong? What was screaming obviously that it wasn't a bull market? I can't necessarily find those arguments as easily. And if anyone in the chat can find them, please feel free to put them. But remember, when the S&P was like 505, I remember we were saying, hey, if we fall to like 480, 490 on the S&P, it's no big deal. We've had 3 months of like a lot of momentum building. People want to take profits. Taxes are coming up. Like, we're going to see some volatility. And it played out like that. We went all the way down to 493. Then we had the black swan with Israel and Iran. And, we saw some momentum to the downside. Now, could we see momentum to the downside again? Yes. The question is just what triggers that. I don't think it's inflation. I definitely don't think it's earnings growth. AI is, being a catalyst for every single company on the planet. I was on Credit Karma today, dude. I was on Credit Karma. Do you guys use Credit Karma? Credit Karma has this new chatbot. Credit Karma is owned by Intuit. And for the first time today, I was just checking my credit, and I saw I see this chatbot, and it says, hey, you can ask a question. And so I asked the question. I say, how much debt do I have? And this thing, within 30 seconds, usually on Credit Karma, I have to like scroll to like find loans and stuff I have. This thing just boop, pops it up right here. You have $7,303 in total student loans. And it just like lists all the other credit cards I have and says, boom, there you go. And I was like, wow, like that was quick, dude. That was efficient. That was fast. That should help Intuit drive more revenue and sales and productivity for their company. So from like AI being used from that perspective to find out how much debt I have with my student loans via an app. I mean, it's just getting to a point where like it is everywhere. And so from that perspective, I also think that's a catalyst, and I think that's going to help the bull market as well. Let's get an update on Netflix. Netflix is signing a deal with the NFL. Their stock is back up to where it was right before earnings. So if you got the Netflix dip at around 540, now it's at 620. Here's the reason why Netflix continues to add more subscribers and what they're doing on the advertising front as well.
Netflix says its cheaper ad-supported subscription plan now has 40 million users, and that it's struck a deal.
40 million is insane, dude. A lot of the other streaming giants do not have 40 million people just for their ads, much less the paid subscribers.
Be able to stream 2 NFL games when on Christmas Day. For more insight, let's bring in Mark Mahaney, head of internet research at Evercore ISI. We're watching this play out. It's taken years for streaming to see what it's finally going to look like. I've been struck by the new bundles so it's like what's old is new, and I feel like deja vu all over. Am I going to have a streaming bundle? That's the way it's eventually going to work.
You probably will, and most people do now. So what's so interesting about this deal is just what it reflects. So Netflix is actually now big enough to economically afford to carry NFL football games, and the answer is yes. Right. They've got 270 million paid subs, and for them, the cost of any NFL game, these 2 NFL Christmas games, it's the cost of a medium-sized movie for them. So it's already in their $17 billion content budget for this year. And now they've got 40 million viewers. They had 5 million last year at this time. My guess is that next year they'll probably be close to 80 million. And they're doing this globally too. That's one thing they offer to any content provider, which is that they offer this global reach. Because believe it or not, there are a lot of people who really enjoy NFL that don't live in the U.S. And so Netflix can actually give those viewers an audience.
They have someone that can bargain for which games and matchups that they. I mean, I wouldn't want a bunch of crappy matchups. And you have to have someone who's smart enough to know who's going to be good in advance of the season, don't you?
I guess you do. It's somebody hopefully has figured that out. But to me, this is kind of a coming out moment, another coming out moment for Netflix. They're big enough, they're material enough, they're substantive enough. They got the cash to do it now.
Okay, so Netflix is doing really well. We got the market open in 5 minutes. I want to play another little clip from Josh Brown yesterday talking about CPI and if this rally can continue, and then we will get into the market open.
Welcome in, Josh and Cameron, both here at Post 9. Josh, I guess I don't get more or less bullish based on price action because I'm not a swing trader. But if you're somebody that's a little bit more short-term oriented and you're trading based on momentum, yes, obviously you're getting the green light here. You're getting confirmation everywhere you look. It doesn't matter what sector. It doesn't matter what overseas index. They're all flashing the same green light. And it's coinciding with the type of economic data that we've been waiting for and hoping for. You have prices in the economy, the growth of prices in the economy moderating, but you've still got a very healthy job market. You've got the consumer still spending, and you really don't have anything in credit spreads or any kind of defaults or any of those things that we would have thought were guaranteed given the rate of interest rate increases that were going on over the prior 18 months. So when you put everything together and people are looking at the $6 trillion that went into money market funds over the last, 2 years, people are just saying, you know what, maybe I'm not long enough. Maybe I am ignoring what the market is telling me. Maybe I am missing out on a very typical mid-cycle bull market. And that's where we are right now.
We shared a chart yesterday on the market close. What Josh Brown is saying right there is really interesting because the chart I shared, let me see if I can pull it up right here, is that in a typical bull market, if you try to time, here's the chart. This was a great chart. I think Tom Lee shared this one. Or not even just in a bull market, but in general, for the S&P 500, if you invested on any day over a 3-year period, your average return is 40%. If you invested at an all-time high, meaning the S&P right now is at 530, you decided to invest in day, historically, over the next 3 years, so by 2027, you will be up 48%, even if you invested at $530 versus someone trying to find, can I get in at 500? Can I get in at 490? Blah, blah. And that's because we talked about this yesterday. The trend is your friend. And if the trend is your friend and you have to have a little bit of common sense around what's happening in the macro, right? Like it shouldn't be very obvious, like interest rates being at 0, that things are going to hit the fan. It doesn't seem like that's the case given interest rates are at 5%. And if you can tell that companies are producing real numbers, so from a macro perspective, inflation's coming down, even though interest rates are high, and Nvidia, Amazon, et cetera, are putting up incredible numbers, then maybe the trend actually is your friend, even at an all-time high. And are you getting the best price? Maybe not. But over 3 years, you might be getting a really good price, given it is indeed a bull market. And this is not just about a bull market. This is from 1988 to December 2023. We've had recessions in between this 35-year period, roundabout, 36-year period. Over 3 months, over 6 months, over 1 year, 2 year, 3 years, you outperform if you invest at an all-time high. I thought this stat was fascinating because I was like, it just goes to show that when it comes to investing, it's very, very difficult to time it. Unless it's an individual equity where you know there's about to be a growth curve or you know this thing is hitting the fan and it's time to sell. For the broader market, it's tough. It's very tough. And so the S&P 500 at 529, I am curious now. 530 is psychological. 5,300 is just like every time a bear has to look at that, they must feel disgusted, right? So how much room does this have to run in the short term? I mean, could this actually get to 6,000? Do we actually have another 10, 15% in us, like some of the major bulls like Tom Lee are suggesting? Because if we do, 2024 is going to be an incredible year. And the worst part about that is the FOMO is going to start to seep in. If you've been bearish for not just this year, for all of 2023, and 2023, we were into a bull market starting around May, we're really starting around like January, February, it became a bull market. We bottomed out with Tesla, Palantir, $6, $100. And then by March, April, things started picking up. So it's been almost a 2-year bull market by the end of 2024. If you've made no money in it, it's going to be tough because you're either going to have to double down on being bearish, double down on getting your 5% from a money market fund, or say, screw it, AI is real. I'm not going to wait the next 5 years for AI to prove it's real. It's here right now. I can ask my Credit Karma chatbot how much debt I have and get an answer immediately, which means I should probably take this a lot more seriously. And so we'll see. We'll see how the market can perform today and over the coming weeks. Thursday, May 16th, 9:30 a.m. We are all here on planet freaking Earth. Thank you all for being here today. The stock market is now open. Wake your ass up. Here we go. S&P 500, 530 hundo, up 0.07%. Absolutely incredible. 530.20. Look at that green candle. People are betting on the market and they are going higher. We'll get back to that in a second. Palantir 2172. If you're just joining, Stanley Druckenmiller is back in the stock. 770,000 shares at a $21.30 average. He was gone at $8. He's back at 21. Happy to have him back. Bitcoin 66,000. Chubb Limited. This was the secret stock Buffett bought over the past 8 months. This one's up 5.6% on the day. Now that he has disclosed that he has bought. MicroStrategy is down 1%. SMCI down 3%. SoFi down a little bit. CleanSpark down about 2.1%. TFC at $40 yesterday. Nice to see TFC hitting $40. That one's down just a little bit. JP Morgan all-time highs at 202. Sirius XM, another stock Buffett's increases position by 350%. That's up about 1% in the pre-market. Let's go to Robinhood. Robinhood 1847 down a little bit, 0.30%. Let's check out the meme stocks. Let's see how they're doing. GameStop 13% down. Wow. GameStop 13% down. AMC down 4%. So a little bit of green candle forming. It's not down as much as it was before. We are seeing a green candle. It's down almost 15% of the pre-markets. I'll be curious. Does this green candle have any legs to it? You guys can see it right here. It's trying, like it's really trying, that green candle. I'm curious. When does that go red or when does that kind of fall flat? AMC as well. They're trying with their green candle. They're trying really hard. Try to get this thing back on the road. Faraday Future. This thing is insane, guys. This thing is up another 20%. This thing is actually insane. This thing is up 14x. It was at 6 cents. Now it's at 84 cents or 12x, something like that. In like less than 3 days. That one is insane, dude. That one's actually, it's 94% short. I don't know how it keeps going higher. I think it's just because new people keep getting in because it's only 80 cents. So people are like, oh, I can buy 1,000 shares. And it's like, no big deal. But that one keeps going higher. And I wonder if Faraday Future can take advantage of this momentum and like actually save the company, because that would be a hell of a thing if they could save the company off the meme stock rally. But we'll see what ends up happening to that. AMC, green candle starting to fall down. They cannot hold the momentum, looking like it's about to go red. And then GameStop's red. Went super red. Could not hold it up. Oh, man. Yep. It looks like this thing. I don't know, dude. I don't want to say the rally's over, but GameStop and AMC, they're not doing what they need to do. And there's no real buyers coming in. Robinhood here, 1867. Nice green candle right there on Robinhood. We're seeing it start to get a little bit of momentum here. 1873. All right, getting more momentum. I think the chief brokerage officer was on CNBC today, and he was talking about their April metrics. I'll see if I can get that clip, but Robinhood getting a little higher. And one thing I was thinking about Robinhood this morning is, like, I looked at their chart. These guys are up 45% year to date. I know a lot of people really like, why isn't this thing at 24, 25? Even me, I'm just like, yo, I think this thing could be closer to 30 right now. One thing, and I really like that it's actually not surging, is that the market is forcing Robinhood to prove that they deserve an extra premium. When a stock's up 45% year to date, I mean, even Palantir was up almost 50%. Now it's up like 30%. But the market's like, hey, we like your progress. We believe you're doing good stuff. You're raising guidance. All the analysts are raising the price targets, but you've got to really prove it to us. And when they really prove it, whether it's a Palantir or Robinhood that are up a lot year to date, then they keep those gains, right? You don't want Palantir to get to 25 again and then come all the way back to 21 because of whatever, you want them to keep it. And so I think with the context of Robinhood, they've already up 45% year to date. They need to really prove they're not messing around to get further gains. And I think if they can do that, they're going to be good. S&P at 530, and then same thing with Palantir as well. IWM is down 208.94 right now on IWM. So that's what we've got here. Where's AMC? Is AMC still down? AMC is still down 6. Well, and this is the reason the day this whole rally started, I said, and I kept my word, I'm not getting into these stocks. And the reason I said that is because I don't know when this thing is going to collapse, and I am not going to hold a bag on these. I will hold a Robinhood bag. I will hold a Palantir bag. I will hold a Tesla bag. I will hold my girlfriend's bag. Okay? I will be a simp and hold that bag. I am not holding the GameStop or AMC bag. I'm not doing that. All right? We're not playing this game. So, yeah, we're like, this is the one bag I was going to make sure that I was not going to be able to hold. And this one, I mean, look, it's doing bad right now. Maybe Roaring Kitty tweets something and gets this back into motion. But they are still struggling. Celsius at 92. Nice dip at Celsius, was at 64. Dell at 147. Now, Dell had a really good day yesterday. It looks like the market's really starting to understand the AI potential of Dell in a more sophisticated way. I think their earnings, I don't think they reported yet, but their next earnings are going to be really exciting because if they can follow up the earnings they had last quarter, same thing with IBM, I think that's going to be pretty good for Dell and for what they're really trying to do. And IBM and Palo Alto Networks, by the way, if anyone got into Nancy's trade, Palo Alto 315, Palo Alto was at 275, guys. Do you guys remember that? That's when Nancy loaded up on in the money call options. 315. So she's up nicely on those. And the reason she bought deep in the money call options is because it's a little bit cheaper than buying just shares of the stock. So Palo Alto did well. And the reason I bring them up is because IWM and Palo Alto late yesterday after hours disclosed a partnership. IBM up a little bit, but it was a partnership around cybersecurity and AI. And just reading the highlights from that partnership leads you to believe that, oh my goodness, AI is interacting in so many different sectors, especially around IT and security, that like cybersecurity in particular, which was Palo Alto specializes in. Now, this is not a joke. This is like a real thing that's happening right now. And the market is going to have to eventually recognize that. And a lot of the people that are bearish on what AI really is, they're also going to have to recognize that over the next coming weeks. Bitcoin, 66,251. We got Bitcoin up. Iran had decent earnings, but they're up 3.65%. They were actually down yesterday on their earnings. There's another Bitcoin miner. Didn't do the best, or they did good on earnings, but the stock price didn't do the best. Right now, they are up a little bit. PayPal, this one, yeah, I've been holding this bag for a minute, dude. I've been holding the PayPal bag for a while, and it's been sad holding the PayPal bag. I mean, we can even hold the PayPal bag. Yeah, I'll hold the PayPal bag. The problem is I have PayPal options, and this sucker needs to get to like $80 in the next 3 months, or else those options are finito. I'll probably lose I think I have $7,000 in them right now, so maybe we recover $2,000 if PayPal is at this price around the summer, end of summer. If PayPal even gets like 80-ish, we'll probably make a little profit. PayPal. I think the stock is the right stock to hold because it's just ridiculously undervalued, and those earnings were exceptional in my opinion. But the options, when you got a timer on it, you gotta wait. You gotta see if it plays out, and maybe that's not one that ends up playing out. But we'll see. Again, I really do think the company, their earnings, transaction margins were up, average payments per customer was up. They performed on pretty much every level they need to perform on in the last earnings. But the stock's being held down, and maybe it's being held down because it wants to be accumulated as well by the toots. They're doing $5-6 billion in buybacks this year. I don't see the bear case for why this thing deserves to go back to 54, 51, or even stay at 63. But maybe needs another quarter, and maybe needs inflation to come down to kind of get the pump that we are looking for. JP Morgan at 202, Nvidia 950, bro. Oh my goodness, 950 on Nvidia. Yo, put in the chat if you own Nvidia, like you actually own Nvidia, not just like one share. Oh wow. Also put in the chat if you own this one. Apple 190. I haven't seen a 9 next to that one in a very long time. Look at that, Apple. $191. Oh my. 190. Look at that green candle, dude. Remember at 167? Okay, so at 167, we were on the stream saying, hey, Apple looks attractive. Now I did not buy, A, because I didn't have the money. B, also I was just like, you're still paying a lot for something that's not growing. But I think all of us in the chat were like, all right, at 165, it looks attractive. Now 155 would have been a no-brainer. 165 was like, it looks decent. The problem is, if they didn't do the $100 billion in buybacks, this thing probably wouldn't be at 190. So that is what's propping it up. It's not the iPad. By the way, the iPad looks like the thin iPad looks like it's not that exciting. I've seen some reviews. People are like, they don't care that much about it. It doesn't look like it's the M4 chips. Definitely not the Vision Pro. Maybe the iPhone with the ChatGPT interface kind of props it up. But I mean, we'll see what happens. But the buybacks did it. And now you got Apple here at 190. Benny says I was waiting for 150 on Apple. Yeah, I mean, 155 I thought would have been really attractive, even from a technical perspective. But 165, I think all of us saw it was hovering at 165 for so long, and the market loves Apple. I mean, also Buffett, just owning Apple leads his legion of followers to also buy Apple, right? Kind of they just follow him. So as long as you've got Buffett on board, even though he sold a bit, you're going to constantly have people thinking that Apple is the safest stock in the economy. And so it's hard to see Apple stay down for that long. Apple now year to date, let's see them. Apple year to date is, wow, they're up 3%. They're beating Tesla. Tesla's still down 30% year to date. Speaking of Tesla, let's get to this story. This is very interesting. I want to know what you guys think about this one. So, oh wait, where's SoFi? before I move on to this. SoFi 723. Okay, why not? Robinhood 1858. So Robinhood fell from 1874 to 1858. Right now 1860. SoFi here 724. Apple 190. Okay, so the Tesla largest what's his name? Tesla largest like retail investor has 26 million shares, and he used his whole 26 million shares to vote against the company, or to vote against Elon's pay package. I'm seeing everyone in the chat saying how much NVIDIA that they have. It seems like the chat has a decent amount of NVIDIA. We got June at 34 shares of NVIDIA, Jose 22 shares of NVIDIA, Claudina 50% of her portfolio. That's an incredible portfolio. 15 shares with Ash. We got shares in our Roth IRA. Andre, Tom Brady has it. All right, so we got a decent amount of the chat owning NVIDIA. This guy says Elon doesn't deserve the $50 billion pay package. His name is, I'm going to say it wrong, but his name is Leo Kwogwan. He's like some math entrepreneur or something. He has like a $4 billion stake in Tesla. And he's like, yeah, I'm voting against this shit because Elon doesn't deserve it. Again, I think it's not the right decision. Now, the question is, will those 27 million shares actually make a difference in the context of Elon's package? I don't think it will. But he's doing it more to make a statement about how he feels the stock hasn't, reflected the growth of the company, or the company isn't really working to get the stock to get higher. Walmart 63, up 6%. Again, really, 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 really good to see a company like Walmart surge on earnings. They deserve it. Walmart is a $500 billion company. It's not easy to get them up 6% in a day, but they do deserve to go up if they beat their numbers. And they beat their numbers. And we're seeing the street respect them and give them the value they deserve if they beat their numbers. And they're beating the numbers where interest rates are high, right? So on a consumer product, people have jobs. They're tapping into the money that exists, giving low prices, still being able to get people into their ecosystem. And they're doing some really good thing with e-commerce. So Walmart's innovating in a lot of different ways. But again, for Tesla, let's go to that Tesla right now. It is sad that he's voting against it. I don't think his 27 million shares will make a difference. If somehow Elon actually loses and his compensation gets rejected by shareholders, I think Tesla goes from like 170 to like 140 again. I mean, like, there's just no way that Elon is going to put up with that, and there's going to create more internal turmoil in the company. So hopefully that does not play out that way. Love how Walmart is implementing AI. Seriously. Yeah, I think Walmart, I read a couple articles that Walmart is working with AI in a variety of different ways, particularly for e-commerce. Oh, I think Roy, by the way, shout out to Crossroads. Roy, he I think we did a Twitter Spaces where he told me he really likes Walmart. Second of all, he called the stock, the Buffett stock. Apparently, because this guy's like a genius or something, in May, he look at this is hilarious. In May or in March, he was like, you know what? Buffett's gonna buy CB. He said this March 3rd. I don't know if Roy is talking to Buffett on the side or whatever, but there you go. I wish I had a prediction that good. It's CB. I would never thought it was Chubbs Limited, dude. I was like, it's Verizon, it's PayPal, it's Disney. I was thinking all the sexy names. It's Chubbs Limited. I found out what Chubbs Limited is for the first time yesterday. It's an insurance company. So shout out to Roy. He got that right. 4% on Chubb Limited. Walmart 63.25. SoFi 721. Apple 190. PayPal 63. IBM's up a little bit. Palo Alto up almost 1%. AMC's down 8%. Robinhood 1861. S&P still 530. Incredible. Bitcoin 66,000. QQQ I think 451. 453 on the Qs. Carvana's up a little bit right now. Microsoft 424. Wow, Microsoft back in the 420s. They're back. And then you got Amazon here at 186. Where's GameStop? Wow, 17% down. No one's buying, dude. No one's buying. Literally, no one is buying. Kelly says Roy doesn't predict market trends. He decides them. Yeah, I think Roy is like Roy. We all know Roy is Alex Chris, as he says right here. And I think Roy is just accumulating more shares of PayPal, so he's keeping it under pressure. But it was an incredible call, dude. I did not think Chubbs Limited would be the stock. Like when they told me yesterday on the market close, they're like, it's Chubbs Limited. I was like, the fuck is a Chubbs Limited, dude? I was like, where's the Disney? Where's the like? Give me some action here. Chubbs Limited. So there we go. GameStop right now down 17%. Now also the Saudis disclosed what they're buying yesterday. So let's take a look at that with their 13F. Right here. So the Saudis, the Saudi Arabia's Public Investment Fund, the PIF, top 5 positions. Uber at 27%. Lucid which is at this point, I mean, I wonder when they're going to call it quits on Lucid, but it seems like they're going to keep pumping money. 19%. Electronic Arts, 16%. Take-Two, 8%. And then LIN, I don't know what that is, at 2.73%. They added some ARM calls. They added Starbucks calls. They added Amazon calls. And they added Adobe calls. And the top 5 buys for them were ARM, Starbucks, Amazon, Adobe. Top sales were Meta and CCL, Carnival Cruise, actually. They started selling a lot more of that. So as you can see right here, Uber, this is incredible. 5 million shares, 72 million shares, $5 billion stake. And then Lucid, 1 billion shares, $3.9 billion stake. So Lucid and Uber is what the Saudis are betting on. Is Robinhood mooning? Is Robinhood doing what it's got to do? 1884, not bad at Robinhood. All right, I haven't checked my portfolio today. Let's check it. What are we doing here? Okay, cool. We're up about $2,000 on the portfolio. Not bad. So Robinhood here, 1885, not bad. 1888. All right. 1887. Here we go. Let's see. Can we crack the next level on Robinhood and see if we can keep this train going? 1886 here on Robinhood as well. Walmart 63.50, QQQ 453, PayPal 63, Palantir 2167. Palantir has been relatively flat. I think, and I said this yesterday on Daily Palantir, I think the macro is now irrelevant to Palantir because after the earnings they put up and after the guidance they were able to put up, I actually do think that like the macro doesn't matter. Now it's a question of can they just keep putting up results and eventually the street's going to buy the stock. But like if interest rates come down, will Palantir go up? Yeah. But like, I don't think it's going to explode like some of the other interest rate sensitive names. I think it's really about the numbers right now. And they put up the right numbers. I wrote that in my newsletter as well yesterday. They just need to like keep doing this because the street's like really waiting to see if this bootcamp thing is actually the next biggest go-to-market strategy. And so I think this is let me be clear. I think this is a great accumulation time for Palantir. I've been accumulating Palantir. I don't think this thing is going to 17, 18 bucks. I think the momentum is on their side. We just got to see them keep going. Oh, Robinhood, 19 bucks. There we go. Robinhood, 19 bucks on Robinhood. Not bad. So we are seeing a bit more momentum now for Robinhood at that $19 range. And good. We should be getting $19. It's good. Now let's see if we can, maintain the momentum. This is again a slow build on Robinhood. It's going to take some time. For those that missed the April metrics yesterday, they were phenomenal. Very good metrics. They executed the way they needed to. May is going to be crazy. The first 2 weeks of May, we've had Bitcoin go up, like 7%? It was up 6% yesterday, right? So Bitcoin's up almost 8-9% for the month. And the meme stocks have brought a lot more users onto Robinhood as well. Let me see the App Store rankings. I think Robinhood is still number 10 on the finance App Store. Yeah, number 11 right now. So, and again, dude, Robinhood's like they're getting the users. That's what matters, right? And those users are going to help them. Okay, so we're seeing a little bit more of a green candle right now. Robinhood 1916. All right, not bad. Not bad. Pretty good. We're seeing some momentum. We're seeing some momentum here on Robinhood. Let's go to Jamie Dimon and get his thoughts on inflation in China. 2 quick clips. He did an interview yesterday with Bloomberg, and then we'll get back into equities and see what's happening there. So even though we saw CPI come down, here's Jamie Dimon on his thoughts on inflation.
Future is for inflation and
I'm a little more worried about it. I mean, we've had very big fiscal deficits, and I think the underlying inflation may not go away the way people expect it to. And I look at the future like a lot of things we look at are kind of inflationary. The green economy, the remilitarization of the world, the infrastructure requirements, the restructuring of trade, fiscal deficits. So I think there are a lot of inflationary forces in front of us that may keep it a little bit higher than people expect. So the surprise would be rates are higher, inflation a little bit higher, and maybe that'll slow growth. And obviously geopolitics is a whole different issue. That could be determinative in what our economy does next year. And we're just not going to know.
But so does that mean you think it's 50-50 whether the Fed cuts or hikes next time around, the next move?
I really don't pay that much attention to that. The Fed will have to follow the data, and I don't know what the data is going to say, but I think they are doing the right to be patient right now. See what's going to happen. They may not know for a couple of months.
But no big correction. I mean, if you don't pay that much attention to it, it means you're not worried about anything.
No, I'm worried. I just said stocks are very high, and I think the chance of inflation staying high or rates going up are higher than other people think. So I think the chance, my view is whatever the world is pricing it for a soft landing, I think it's probably half that. I think the chance of something going wrong is higher than people think.
I think that's fair. I mean, you can't blame him for saying the chances of a soft landing being messed up are possible. The question is like, how likely is that to be the case? And I don't know how likely, given all the stuff we talked about today, is it to necessarily be as bad as Jamie Dimon thinks. Okay, so let me, I'm pulling up Robinhood right now. We're seeing some momentum here. Here is the order book volume for Robinhood, as you guys can see right here. Yeah, you guys can see right here. So here's the buy and sell spread. So these are all the orders coming in real time. This is not perfect, but this is a pretty decent, accurate sort of understanding of the buy and sell orders. So as you can see right here, wow, look at that. There's 75,000 shares waiting to buy Robinhood at 1905. Do you see that? Now that might be fake, or that might be, yeah, that's, I mean, if it's real, it's about to, if it drops to 1905 and those 75,000 shares go through, that might hit the price really nicely to the upside. That also serves as support. So now if Robinhood really does fall to 1905, it immediately has shares waiting to be picked up there as well. Wow, there you go, 75. Now that might be fake. A lot of times hedge funds and market makers throw up these numbers and make them fake, but that's a pretty big green wall. And then at 20, we have a ton of resistance. At $20, let me show you right here. So at, yeah, okay, so that wall just disappeared and the stock fell down to 1898. Very interesting. So either those shares got eaten or that was a fake wall, but we just fell to 1897. At $20, oh wow, it's okay. It's not. I can. Oh no, right here. Where's the 20? Is it showing you? Okay, it's not showing on. It's not showing on this version, but on my phone, I can at least see it here. It's not showing on the desktop version. At $20, we have 458,000 shares waiting to be sold. 458,000 shares. So this is going to be a little game, and we'll see how this one plays out. We got a nice red candle right there from 1924 to 1890 on Robinhood, and we'll see how that plays out. But I do think the street is waking up and they're realizing, hey, this is going to be an opportunity. And I think retail is also realizing we want to get in this thing before it actually explodes. And that's why we're seeing some momentum there. Okay, here's also what Diamond said on China as well. While I'm using Webull to look at this, it's a free software. And so you can use them to access charts. All right, here's Diamond on China.
Between China and the U.S. And what does that mean for your appetite of being China?
Yeah, so the geopolitical situation is very tense because of Ukraine and Russia, Iran, the terrorist activities in Israel, North Korea, nuclear blackmail. We've never had nuclear blackmail before. And this is, of course, affecting our relationship with China. And, it's going to be hard to have a great relationship with China as the Ukraine war is on. We're kind of on different sides of that. And put Taiwan aside. Having said that, I think it's the right thing for America to fully and deeply engage with China, competitively. Every nation is going to do what's in their own interest for national security. So should America. We should define that fairly and properly. If there's unfair trade, negotiate that or do whatever you need to do. But engagement is the right thing to do. China is not a natural enemy of the United States. They have a lot of their own problems. So, to me, we can work together as best we can. And then we have common interests: climate, anti-nuclear proliferation, anti-terrorism.
But what does it mean for a bank working in China, actually, given all of this volatility?
They're cautious. I mean, China, if you look at China from a risk-reward basis, it used to be very good. It's not so good anymore because all these things can go wrong. And remember, we bank, I've got the number, but 1,500 multinationals in China. They're not leaving China, so we're going to serve our clients there. We're just much more cognizant that the risk is higher. And might put Hong Kong in that bucket too. We look at China, Hong Kong as one at this point from a risk standpoint.
Now, what's interesting about that is he's right. And that's why China's economy has not really been able to take off. Alibaba right now, let's see what they're doing. Robinhood 1897, Alibaba 82.95. They're up about 2.3%. And then NEO, take a look at them, 5.34. So, the Chinese economy is not in a good situation. We know that Chinese equities are relatively undervalued. One could argue deeply undervalued. At least Michael Burry thinks so, compared to U.S. equities because of the China risk. And so Diamond's basically saying, look, whoever the next president is, if he doesn't keep a real good relationship with China, or like at least a productive relationship, China's going to go down the drain, and they're going to try to take us down the drain with them. And we don't want that for a global economy to exist, which is a geopolitical risk. He outlined that in his shareholder letter a couple months ago towards the economy. How big of a risk is it? I think it's a big risk. Does it stop AI from being a tailwind? Does it stop inflation coming down from being a tailwind? Probably not, but it is a geopolitical risk that everyone needs to think about a little bit more deeply as we become broader global partners with China, or we stop becoming global partners with China as well. Robinhood's chief brokerage officer, Steve Quirk, was on CNBC today. Here's the clip of what he had to say around the meme stock trade.
The return to the meme stock trade this week, and seems to have meant a lot of business for trading platforms, including Robinhood. Joining us right now is Robinhood's Chief Brokerage Officer, Steve Quirk. Good morning to you.
Good morning.
We're all trying to understand what you think actually happened this week, why this happened, and really how much of this was driven by retail versus institutions.
Yeah, if we just look at the numbers, the last time the meme stocks, had their rally, we're probably doing in our customer base, we're probably doing about a quarter of the volume we were at that point in time. So we're not seeing.
Which tells you what?
Well, it tells me, there's a couple things that it tells me. Number one, if you think about all the people that came into the market during that period, I mean, a huge, huge number of new market participants entered that at that point in time. They've
Oh, wow. These are new numbers. We've never seen this. So GameStop was 19% of Robinhood's volume on Tuesday. AMC was 14%. NVIDIA was 8%. Wow, that's incredible.
grown up. We can see that in our data. 80% of those customers are still with us, but now they're opening retirement accounts. They're looking for yield. They're opening the credit card to get 3%. They've moved on with their life, and they're sort of rounding out their investing experience. In this instance, we did see our volume spike. So there still is interest in this. There's interest in movement and volatility. That's really what it is. But, our two biggest days were not anything related to this. They were around NVIDIA earnings and NVIDIA news.
Okay, I don't know if you guys can tell, but I think the reason the stock is up 2% right now, it's because this guy went on CNBC. But what he's doing right now is basically telling the investor class, we're not a fucking meme stock company anymore. If you read between the lines, he's saying, look, our two biggest days were not the meme stocks. It was around NVIDIA. And NVIDIA is a very sophisticated company, Jensen Huang, blah, blah, blah. So he's basically telling people, hey, Robinhood is not just a beneficiary from these meme stocks. Yes, it helps us, but that's not our business. It seems like they sent him to CNBC to go tell everybody it's not about the meme stocks. We're a more sophisticated company, even though it's helping our business. And maybe that's why the street's a little bit excited right now, because they have some clarity that it's not just memes. It's more so, a functioning company.
Look at this as a positive thing or a negative thing for the marketplace. When you see stocks move like this, I mean, we were talking about sort of the integrity of the market the other day with Jay Clayton, former head of the SEC.
I watched it.
And I think there is genuine concern that when things like this happen and it's not really moving for fundamental reasons, that it undermines that integrity.
Yeah, I think that, by the way, there's a good segment and I watched it. Here, he made a couple points, which I thought were really interesting. The number of tradable instruments is down pretty dramatically, right? At the same time, we're at the highest participation rate in the US for households. So now you have more participants with fewer instruments, right? It's naturally going to lead to some concentration in areas. I would also say, even the number of people that came into the marketplace, during COVID and the GameStop era, those people are still in the marketplace. The majority of them are still in the marketplace, and now they're investing in a very different way. So the question always becomes, hey, we all think it's beneficial for every American to participate in the greatest wealth creation vehicle in the world. How they get there, if it's through this.
Right, but if it's through speculation and they lose, that's a problem.
It is a big problem.
Sometimes they leave; they don't stay.
Yeah.
So when you see a GameStop move the way it does, or by the way, Trump Media's company, that's a top 10
It's
stock.
one of the top 10. I think it's number 10.
Number 10 on your on Robinhood. I don't know what you think of.
That's hilarious. He's like, yeah, it's number 10. He's like, why'd you have to mention that, buddy? That's how I feel whenever someone mentions it. I'm like, oh yeah, it's number 10.
That you say to yourself that this seems like a completely plausible valuation, or do you say this is insane? And the folks, it's hard to tell your clients that they're not smart, but are they making a big mistake?
Here's the way I'd say it. If you think, we can watch what they're doing with their portfolios. And as I said, 80% of those people that came into the marketplace are still with us. Over 2/3 of the people that are even participating in GameStop, AMC, DJT, they're long-term investors. So they're taking a small portion of their portfolio and saying,
that's a good answer. He's basically saying, look, we don't have just degens. We have people who like to be degenerate. Everyone likes to go to a party. Everyone likes to have some fun, have a couple beers, but they're not fully degenerate. I mean, that's a great way to frame it, dude. They got to give the coach, whoever coached them on that answer, a raise, because I haven't even thought of that as an answer to that question. That's a hell of an answer.
Saying this is interesting. It's what everybody's talking about.
And they think of it as a trade.
They think of it as a trade. It's not an investment. It's not something that they might, because you can look at, you looked at our RICs. You can see AMC and GameStop are not moving to the top of that.
Right.
This is a trade for them and something interesting, but their core portfolio is going to remain, the most popular names that sit on that.
No.
Okay, we got Faraday Future that is halted right now. This thing is up 1,500%. Absolutely insane. GameStop trying to make a little bit of a comeback here with a green candle. Faraday Future is halted. It's up 64%. This stock is up 1,1500% in the past 30 days. Kind of insane. Let me know in the chat if you got into this. Be honest. Did you get into this? I mean, you had a chance at 6 cents, 10 cents, 20 cents, 30 cents, 40 cents, 50 cents. You'd still be up 100% if you got in at 50 cents. It's insane. I am not in this. Let me know if you're in this. I don't recommend getting into this one. You got to be really careful of this. If it's a trade, then just be ready to lose some money if it goes down, or, it's just one of those things where you're really hoping that this thing just keeps pumping and you can sell it to some other one who's willing to buy it, because on a fundamental basis, Faraday Futures probably does not deserve to be worth $1.16 a share. If we look at their max chart, the thing used to be like $4,000 a share or something. Yeah, it used to be $4,980. It's now $1, which just goes to show you what has happened. But I mean, shit, if you got it at 10 cents, you're up 10x. Not good. I mean, you can't be mad about that. Someone got in at 17 cents. Zyla got in at 17. Mario got in at 25 cents, but I've been trading it. I'm Beneficial got in at 9 cents. All right. So you're up a decent amount of money. What if it goes to $5? I don't know, dude. Could you imagine Faraday Future is the way that is the actual rally out of all the DGen stocks? Like in the portfolio on the DGen, we've got Mullen up 3%. All the rest of them are down. Virgin Galactic, Hollow, Save, Beyond Meat, Plug Power, BlackBerry, Reddit, AMC, GameStop. Literally, Faraday Future is the only one that's up again, 64%. This week, the stock is up. Oh my God, it's up 2,700% in the past 5 days, dude. Goodness gracious. Past month, it's up 1,500%. Past 6 months, it's down. Oh, wow. So it was actually, dude, it was $1.70 in November. Whoa. Interesting. I thought this thing, I didn't know this was $1. Look at this. It was $1.70 in November. Some people might break even from if they bought in November. Look at that. $1.50 November. Year to date, it's up 100%. But in the past 5 days, it's up almost 3,000%. Amit is going to start justifying FOMOing in soon. No, man, I still do not think playing any of these is smart. I mean, if it's fun money that you want to lose and you it's like gambling on earnings in my opinion. It's like betting on Google calls on earnings, and maybe Google goes up, maybe Google goes down. That's how I think of it. But if it's like real parts of your portfolio, I personally don't think it's the smartest thing to do. Obviously, everyone has to make their own decisions, but I'm not in any of these guys. I'm not in any of these stocks. None of the only one out of this list that I'm in is Robinhood. That is it. That is it. And I would, by the way, I would tell you guys if I was in one of these because I want to make some money. Like if I was in one of these, I got in early, I would make some money. I don't care. But I said this the day I went live at 8:45 on Monday. I don't really agree with this stuff. I mean, this is fun. It's cool to cover, but personally as an investor, I feel like I've matured over the past 3 years. I don't have fuck you money where I can just afford to lose it. If I did, then I probably gamble with it, but I don't have that money. And so I'm not in these trades, but it does seem like retail's holding the bag on some of them. Faraday Future, now it's back. It's still green candle, but it's down a little bit. Seems like retail's made some money on these stocks as well. Okay, there you go. We got the red candle. Whew, that's a big red candle. It was up 60%. Now it's up 30%. It's probably getting halted right now. Wow, look at that red candle. Within 5 seconds, red candle. Boom, under $1. Under $1. Amid, they had a reverse split. Yeah, they did a reverse split. That is true. Yep, halted again. Halted once again. There you go. Now, now again, as I'm Beneficial saying, if it's getting halted on the drops and people can't sell, That means they're going to put in a lot of sell orders to get out at whatever price they can, which just means you're going to have a cascade of selling that ends up happening potentially as this thing gets unhalted. Okay, let's go to the Mag 7. Let's see how they're doing right now. Mag 7, and Tesla's down, Nvidia's up, Amazon's up, Google's up. Wow, Google 175. Oh my gosh. Google, that's close to 180. They were, I think 183 is where they topped out after earnings, and they deserve it. They had a hell of an earnings or a hell of a Google I/O event yesterday. So they deserve it. Apple 190, Microsoft 423. Okay, let's ask a question here. Out of these 7 for the rest of the year, Tesla, Nvidia, Amazon, Google, Meta, Microsoft, Apple, which one do you buy? Out of these 7 for the rest of the year at these prices, which means Nvidia at 950, not Nvidia at 800, Nvidia at 950, Google at 175, which one do you buy for the rest of the year? I think it's actually not that easy of a question. It's a little bit harder to kind of figure out. Mullen is up 3% right now. And then the FFAI, whatever, is still halted. Let me just add it right here so I can see it. Faraday. Okay, we're still halted. So, okay, what do we got in the chat? I see a lot of Googles, dude. I was thinking Google too. I don't think Amazon, because they're up 20% year to date already, and Amazon, their margins are not as incredible as Google's. Operating income margins just went up to 10%. Nvidia at 950, I think, is by the end of the year, I think we get closer to like 1100, but still, I still think that's asking for a lot. Google, I feel like, is going to 225 now, and it's going to happen. Now, maybe it doesn't happen this year. Microsoft, I just don't trust given the valuations. 36 PE on Microsoft's a little bit too much. Google still's at a 27 PE, bro. A 27 PE still. Amazon's PE is 52. That one's always been high. Nvidia's at 38, which is reasonable given their growth. And then Tesla's at 59 or 44, roundabout. And then Faraday Future still halted. Google, I'm seeing a lot of Google. Okay, let's do this. We have to ask a poll. We'll do a poll in the chat, but we're only allowed 4 options. So I have to get rid of 3 of them to ask this poll to make it. So let's see how I do this. Am I only allowed to start a poll? Add option. Yeah, you can only add 4. Okay. Which one for the rest of the year? Which 4? That means we have to take off 3 right now. It's so sad. We got to take off 3 right now. All right, just for the hell of the poll, we're going to take off Microsoft because I don't see a lot of Microsofts in the chat. We're definitely going to put in Tesla there because I see Teslas. We'll put in Google. I see Amazon, so we'll put in Amazon. And then I see Apple the most. All right, so out of these four, let's see which one people pick. Nvidia also makes sense not to put in it because Nvidia, dude, it ran up to, like, how much more juice is left in it? I mean, yeah, it'll probably run after earnings, but do we really see this at 1,300 this year? You know, it's gonna be a little tougher to get there. Versus Apple at 220, I could see that end of the year. I don't think that's crazy. If the iPhone goes well, I don't think that's crazy. Okay, Faraday Future still halted. Let's check on GameStop. GameStop down 14%, AMC down 7%. Those guys are not getting buyers. Robinhood now falling down a little bit, 1858. Still green on the day, but they are down. SoFi 717. SoFi down 1% again. Again, I got rid of a lot of my SoFi. I got rid of all my options on SoFi at 757. The day it pumped, I was like, you know what? This is the best price I'm going to get for a while. And I was ready to live with it. So I took out of it. I did buy 5 SoFi $15 calls just as a $500 gamble in case SoFi becomes the next meme stock. But outside of that, I got rid of most of those options and raised some cash. Palo Alto 312, IBM 169, Palantir 2178, S&P at 530, S&P still at 530. Bitcoin here 66,000. Bitcoin still doing well. And Faraday Future, we're waiting on that to be unhalted. All right, what's on the poll? What do we have? Wow, you guys picked Tesla? You guys picked Tesla out of everything? Dude, really? Tesla? I love Tesla too, but for the end of the year, I don't know if Tesla has the catalyst for the end of the year. I feel like, well, actually, I'm wrong. We do have that 8-8 event. Yeah, that's right. We do have the 8-8 event. That could be the catalyst. Dude, that's so crazy. August is going to be wild. August is going to be a fun month. That's going to make noise if their robotaxis are fully getting ready to go. Again, I'm talking about like end of year returns Which one do you pick? And Tesla seems to be, recovering from a downtrend, but it doesn't seem like it's getting ready to move to like 200 or something. It seems like it needs a catalyst, but I did forget that robotaxi event. If they really show off that robotaxis are here, then yeah, I mean, run to 200 isn't crazy for Tesla. And from 170, there you go. That's a nice little gain from this price. But I guess we'll see. I just didn't think you guys would pick Tesla. I thought you guys would pick Google or one of the other Macs or even Apple. Faraday Future. All right. So back to a green candle, up 32%. So it's unhalted. It fell to 86 cents, back up there. Dude, the volume on the stock is 270 million shares. This is insanity, dude. This is insanity. How does your Webull move that quick? Mine feels slow. You have to click on the 1 minute interval, and then you click on this little EXT, extended hours, right there. And then it shows you right at that moment. And then you should be able to see it in real time. A lot of people don't care about surveys and just click the top option to get to the chat. Maybe that's the reason. Maybe that's the reason. Wow, so it's still running, dude. 97 cents. This thing is still running, bro. It has like 5 million shares traded every minute. I just said volume was 270. Now volume's 276. I think that was less than a minute. Another 6 million shares have been traded. Goodness gracious, bro. That is incredible. Palantir is running. Where's Palantir? Robinhood 1864, SoFi 716. I think Palantir is still flat today. Palantir 2171. All right, so Palantir, a little bit of move. GameStop 15% down. Faraday back over $1. Wow. Holy crap, dude. Goodness gracious. Holy crap. This is what can I go to their website? I haven't even Faraday Future. What does this company even do? I mean, I know they're an EV company, but okay, ff.com. Wow. They probably spent all the market cap on getting the fucking domain name. ff.com. How much they must have paid millions for that domain name, dude. ff.com is literally that was probably some guy in his basement in like 2001 probably registered that domain name, or probably earlier than that. Like that's not an easy domain name to get. 2 letters back to back. Now, I don't trust. That leads me to not trust the company. ff.com. That's too much marketing. They got to focus on the cars. Okay, so I'm on their website right now, and they sell EVs. That's it. They're expecting to sell 10,000 cars next year, or make 10,000 cars, not sell them. Dude, what is this? This company's ridiculous. This slide deck looks ridiculous. They sponsored Chris Brown. Yeah, talk about a red flag, dude. What is going on here? It's still up 50%, though. The market doesn't give a shit. Retail investors don't care. Faraday Futures, $1.07 right now. Absolutely incredible. They are burning cash. Yeah, they're definitely burning cash as well. Adam says, screw you, admit him. I'm in my living room, not my basement. Made 9,000 on Faraday. Dude, I have no hate for anyone who made money on this. I mean, in hindsight, if I knew it was going to $1, would I have bought it at 24 cents? Yeah, I would have made some money. I would love to make some money. I didn't think this thing was going to $1. I mean, when it went from 6 cents to 20 cents, I was all right. That's like a lot of momentum. It's done. $1, bro? $1? That's wild. That's wild. $1.04 right now. And GameStop and AMC can't keep up. Did Roaring Kitty tweet? Let's go to him. Did this guy say something? He's been tweeting so much now. It's been getting annoying. Yeah, he's tweeting stupid movie clips again. Dude, it's like it's hard to take him seriously now. It's like, what is he doing? This is so weird. It really doesn't feel like it's his account. It feels weird. Sint Technologies, yeah, that one's up as well. That's up today? Another 24%. Yeah, that was up 100%. And then GVAV, that one as well. Greenwave Technology Solutions up 124%. Of course, why not? Why not? His tweets are so diluted now. Yeah, it's like annoying, dude. It's like, what's going on? What is he saying? It's not really interesting anymore. Wow. So they're not getting halted anymore, which is a good thing. We're not seeing it get halted, but we are seeing more momentum kick in. Cisco had earnings yesterday as well. Cisco, they are, oh wow. Cisco, this is why you can't trust Cisco, dude. Steve was on the phone yesterday saying, I told you, Cisco. Cisco went up 5%. They're down today because it's Cisco. And like they cannot hold their gains because they're not a growth stock. This thing has been $49 for like 10 years now. But the dividend is good. So if you get a dividend, you get a dividend. But yeah, Cisco, they had good earnings. They beat on EPS, beat on revenue, good net income, I think 1.9 billion. But it's very hard for Cisco to really, really grow at this point. Robin at 1881, up 2%, 1882 on Robinhood. And Faraday Future still at $1.06. This is so crazy, dude. I did not think this would happen in 2024. All right, the poll seems like Tesla won by 50% of the votes. Everyone wants Tesla to go up. Look, I want Tesla to go up too. I guess we'll just see if they have the momentum this year to keep this going. Okay, I want to play another clip as well around interest rates and some analysis on where we think interest rates are going. So here's Wells Fargo and their perspective on what's going to happen with interest rates and when we should see some momentum to the downside for them as well. All right, here we go. You guys tell me to just buy it. Dude, I'm not going to buy it. I'm not going to buy it. Fucking dollar stupid stock. Faraday Future. I'm not buying this shit. This is so annoying. Faraday Future, $1.05, dude. This is right there. I could easily buy like 6,000 shares, but we're not going to do it. We could do it, dude. We could do it right there. We could, those 6,000 shares, we could just swipe, but we're not going to do it. We're not going to do it. We're not degenerates.
On today's inflation read, what it means for the Fed and when or if we will see cuts. Let's bring in Wells Fargo senior economist Michael Puglisi. It's good to see you.
Thanks for having me, Joe.
Welcome. Yeah. You were listening. Who is everyone FOS or does anyone know anything?
Yeah, the inflation discussion to me is one where it's either a glass half full or a glass half empty. Right? If you're an optimist, the way I look at the inflation outlook right now is take core CPI as an example. It's at 3.6% year over year. That's the lowest we've been at in 3 years. Right? We're moving lower, slowly but surely, grinding to a much more kind of normal inflation environment. A little more pessimistic, kind of your side of things, Joe. 3.6% is still really high.
37 months above 3%.
Exactly. To give you kind of some scale for that, 2.4% was the high in the 2010s on core CPI. So you're still 100 basis points above the highest we saw over that entire decade. But again, down from 7, 8, 9 and moving in the right direction, I absolutely think is the case.
We didn't know it was moving in the right direction until today. It was. Yeah.
That's fair. Had 3 bad prints in a row.
Yeah.
Took the Fed out of the play.
And so this is for sure. This is for sure. But I mean, markets look like it today. Yeah. And if if the 2 year is the only Fed guy you listen to, I mean, then
Mr. 2 year.
Yeah, Mr. 2 year. So how many?
Dude, this thing is continuing to run. It's literally, it's insane, dude. Sometimes it pisses you off, bro. It's just like, damn it. You try so hard to do some fundamental analysis, put your money in a good company, really do your due diligence. Like, you fucking go to New York, interview the fucking CEO, try to really understand what's going on. And then this pile of shit is 6 cents on Monday, and it's $1.12 in less than 4 days. And you're looking at it like if you had just put in a couple $1,000s, you would be up almost 20 grand. It's like, it's just, it's so annoying, dude. It's so annoying, bro. Now, if I had money in this, I wouldn't care. But looking at it as an outsider, it's so aggravating. But see, I call this the 5 stages of FOMO. Okay. And right now, I went through stage 1 where it was, you know what? This is stupid. You're a degenerate if you do this. You're just a degenerate. It doesn't make sense. I'm more sophisticated than you. I'm in stage 2, which is like, if I put some money in, I would have made some money. And that's where I'm at right now. If I get to stage 3, that's starting to calculate. Stage 3 is calculating, hey, if I put money in right now, how much could it go higher? I'm not there at stage 3 yet because I'm not going to do it. But if I get to stage 3, that's when I start calculating, hey, if I put money in at $1.11, how much can it go? And then stage 4 is actually pulling up the brokerage and like putting in the order and legitimately getting ready to swipe. And then stage 5 is when you lose all your money and you become a fucking bag holder because you made the stupid decision buying the stupid fucking stock that's up 1,500% in 6 months that doesn't deserve to be up right now. And so we're not going to get to stage 5. We're not going to get to stage 5. This is ridiculous, dude. So fucking stupid. 57%. And I say it's stupid, but I say it with a lot of humility, because if I bought it, like, I wouldn't say it's stupid. I would say, hey, it was a smart trade, but I didn't buy it. So it's it's stupid. If I'm not in it, this thing is stupid. 337 million in volume. How does retail trade 1.2 billion shares a day? Dude, there's a lot of people. Let's go to the StockTwits ticker for this thing. It must be a cesspool in there, dude. So StockTwits is this app. Now, let me not speak too badly on StockTwits. It's more of a toxic place on the internet to get content about stocks. Like, if you guys think Twitter is toxic, you guys haven't seen StockTwits yet. And so this is the place where people tweet like the nastiest things in the world. So how many watchers are there? Wow, there's only 16,000 watchers. I would think there's like 50,000. GameStop, for context, GameStop has 272,000. You guys see that right there? And then AMC has about 400,000 watchers. That just means how many people are like getting notified about the stock. So Faraday has 16,000. Look at this. Look, this is what makes you mad. Look at this. This random dude. Faraday calls are printing or paying. You see this shit and you're just like, damn it. And it's just, look at this, buying more. Look at this guy. Keep this bitch over 1 and no delisting. All shorts are fucked. Buy every dip. This is the type of shit you see here, dude. What else? What else does he have? What else? Oh, let me go back here. What else is it? What other posts do we have here? There's so many ads on this thing too. It's just such a bad experience. It's like littered with ads right now. Every ducking dip, just buy more. This is hilarious, dude. Everyone's just saying whatever they're all just pumping this thing. They're all pumping it. Who's playing psychological games on the retailer? This will hit $3. Fight. These walls getting chopped down. Here it comes again. Bullish. Insane volume. 150 incoming. Barstool Sports mentioned it. Oh, did he mention it? Did Dave Portnoy? Oh, that could be a pump. Portnoy might have mentioned it. I mean, like, yeah, that might be something as well. Hold. Calls are paying. This thing is a monster. Okay, let's see. Did Dave Portnoy mention this thing? If Portnoy mentioned it, that might actually be the catalyst as well. Is there a Faraday car? Yeah, it makes cars. You can look on the website. Go to ff.com because they have the fancy domain name. You can look at the cars. The cars don't look amazing to me. Okay, what did Dave say? Did Dave Portnoy mention? Dave is now bag holding AMC and GameStop. Oh, that's so funny. Look at this. Look what he just tweeted. He tweeted holding a bag. He tweeted holding a bag. That's hilarious. Did he go live today? Did he do his Dave trading thing? No. Okay, this is what he said yesterday. This was actually hilarious. All right, let's listen to him yesterday talking about halts on stocks.
Both halted. So here's what I don't get. All right, someone, why are those two halted in FIF and Cint are not halted, and they're going far more crazy than AMC and GameStop? Anybody? Bueller? How, if it's all algorithms and like if you have certain swings in the stock market, which is what all the crooks say, why are those two halted and the other two aren't? Can anyone answer that? Why is AMC, GME always halted every 3 seconds, but these other stocks aren't and have the same or wilder movements? If it's all pre-programmed, it's not pre-programmed. It's people losing their shirt, and it's Vlad on the phone with fucking Citadel and Steve Cohen, and he's like, hey, Vlad, you fucking cock, stop it. Press pause. Cint is up 163%. It's up 163%. I own dick of it. Hey, Magnum motherfucker. Fed rule based on volume, not price. Check out the volume on FIF, you idiot. Check out the volume on FIF, you moron. Volume. There's more volume on FIF than there is on the other. So what are you talking about? You don't know what you're talking about.
Dude, that's hilarious, right? That's hilarious, dude. Because it's like I think most of us here in the chat understand a little bit about the stock market. Dave doesn't give a shit. Dave's just doing this for content and entertainment. So he's like, why is this getting halted? But this has more volume. This is not getting. He's speaking for literally the common man who like just opened an investment account. Like, what the fuck is going on? Like, why is this happening here and there? But it's funny because if you actually know a little bit of the market, like you know why things get halted. You know there's not a conspiracy to halt things right now. Like things, if they go up, they get halted. If they go down, they get halted, right? Like we know this stuff, but it's just funny to see how Dave is interacting. But there you go. You got $1.07. Yeah, Chris, what you posted on Twitter is not that funny. but Chris just called me an ape on Twitter. Watching Amit right now, seeing his, what did you say? Watching Amit right now, seeing him get mad at all the Wall Street apes. Man, stupid ass apes. This is Amit right now getting ready to write to the SEC about how markets are manipulated. This is Dave Portnoy. That's what it is. This is Dave Portnoy. It's fucking Dave Portnoy right here. I mean, this literally is Dave Portnoy. Basically complaining about how the markets are manipulated. It is annoying though, isn't it? Like, it's got to be annoying. Fucking Faraday Future, stupid ass EV company, up 1,600%. All of us are like begging for 20, 30% gains beating the S&P. This pile of shit, people are up 1,000%. I mean, it's just incredible. It just goes to show that markets are not just rewarding to people who take their time to do due diligence. They can be rewarding just based on people that step in at the right time. There you go. Maximus says, I bought 1,200 shares of PayPal. Dude, you should have bought 18,000 shares of Faraday Future. Don't you know? Don't you know? No, I'm just kidding. That's good. 1,200 shares of PayPal is good. I think PayPal will be very good over the next couple of years. If you're lucky, you'll get 5%. You know? You're not the chosen one to get into Faraday Future at 6 cents, but if you're lucky, you'll make 5% on your PayPal, which is not too bad. Is this the GameStop cult leaning towards Faraday Future because it's cheap and not wanting to get FOMO? I think so. I think it's possible. I think I mean I think at some point if you're a GameStop cultist and your thing's not working anymore, right, down 13%, yeah, you're gonna go to the next greatest thing. Potentially, there's some people that are never going to leave, but there's some people that stay. Alibaba, by the way, up 5%. They were down 5% on earnings yesterday. They're actually up today. So it seems like the market realized, hey, their earnings aren't that bad. Also, Michael Burry buying probably, and some of the other hedge funds getting people excited about China again. But Faraday Future right now, 47%. GameStop and AMC still getting destroyed. AMC down, dude, it's under $5 now. Dave Portnoy's average is 520. He put in 500 grand at 520. And he probably did not sell at $10, so which he would have been up 500 grand. So now he's down a bit on that. And GameStop, his average is $30, so he's up a little bit on that. But that one is down as well. Markets are not rational in the short term, but markets become rational in the long based on fundamentals. Yeah, I agree. Again, it's just funny to see this stuff happen because this is not the right way to invest. And when I mean right way, I don't mean it in like a condescending way. I just mean like this is gambling at the end of the day, you know? Like throwing your money into Faraday Future, hoping it goes up. It really is gambling. Yeah, you might see a trend in a certain direction and choose to bet on that. But look, if you got in, you made money, I'm happy. The thing is up 1,500%. At this point, I don't know if there's more room to run. I mean, does it go up another 1,500%? I don't think so. Like, it's just hard to imagine this thing continues to go that much higher. So now it really does feel like gambling. Maybe at 6 cents, it actually was a smart thing to do. But or even at 30 cents, 20 cents, 50 cents. But now at $1.03, I don't know. It's going to need a lot of volume. 370 million shares already traded. Trying to get this sucker to go a little higher. All right. There you go. There's Faraday Future. I think Faraday was the real Roaring Kitty stock. He can't name it because he can get called whack before Congress, but the short squeeze was much more likely and there was a much bigger chance to print. Not a bad argument. Not a bad argument. It actually was, the short squeeze was way higher. So technically, maybe he was eyeing a different stock. Could you imagine this dude loaded up like millions of dollars worth at 6 cents on Faraday Future? I mean, it would have been bigger than his GameStop return, I think. I think he turned 48 grand to 53 million on GameStop. I mean, it would have been pretty damn insane if he did that. All right. Well, that's what we got with the meme stocks today. Maybe 2 billion in volume. Yeah, if it goes to 2 billion, that's going to be insane. Let's do word of the day. Dude, Gene, I was just about to do word of the day. So thank you. You got me on this. I was literally just about to do it. But I got the reminder, which is awesome. All right. So word of the day. Let's get that out of the way. We haven't done it for 4 days. If it's a crappy word, we'll do a bunch of words because we're missing. But let's do word of the day. All right. So this is a bad word. Impromptu. I know this word already.
Impromptu.
We're impromptu every day on this market open. So I know that. Let's do a better one. Let's go to vocabulary.com. This one's interesting. Hogwash.
Hogwash.
Hogwash is complete nonsense, lies, or ridiculous actions. If an advertisement claims that taking one vitamin pill a day will make you 10 times stronger, or it will make your you-know-what go higher in the case of hymns, it may potentially be hogwash. Complete nonsense, lies, or ridiculous actions. It looks like this Faraday Future stuff might be a little bit of hogwash, but I am very happy for those who got in at 6 fucking cents and they're making money on Faraday Future. But maybe it is a little bit of hogwash. All right, there you go. That's it for me. Thank you everybody for being here. 3:45. We'll see what we got going on then on the market close and keep going from there. Bitcoin still doing well. S&P 500 at 530.69 now. And we'll see how that closes out towards the end of the day. Thank you, everybody. Appreciate it. And I will see you guys at 3:45 p.m. Bye, everyone. Have a good one.